we move on to our next panel session. And also we set the stage for the panel session as well. And while the stage has been set, let me quickly brief you the next panel session, some of the key topics and some of the key pointers of discussion before I call on stage the honorable panel members. Artificial intelligence and robotic process automation in NBFC, let's change the game of finance. It is going to be our second panel discussion session on a very unique subject on artificial intelligence and RPA and the importance it has in the entire NBFC scheme of things. Some of the pointers of discussion which is going to be put forward and discussed by the panel members, the future of AI and automation in NBFC, how AI is helping NBFCs to retain the customers, collaborating humans with bots in building a better future, AI and machine outlining the next steps in the efficiency game for NBFCs to drive the businesses ahead. And with that, now, ladies and gentlemen, please help me welcome the honorable panel members with a big round of applause in the order of the sequence. Joining us first, Jyothirlatha B, CTO from Godrej Capital. A big round of applause to Ms. Jyothirlatha. Madam, welcome to the panel. Please have your seat. Joining her in the panel, we have Mr. SHARAD JAMBUKAR, CIO from Aadhar Housing Finance. A big round of applause to Mr. JAMBUKAR. Welcome to the panel, sir. Please have your seat. Joining next, we have Mr. Vikas Dhankhar, CTO from NeoGrowth Credit. A big round of applause to Vikas ji. Vikas ji, welcome to the panel. Please have your seat. Joining next in the panel, we have Mr. Smitesh Shah, CTO from Ambit Finvest. A big round of applause to Smitesh ji. Smitesh ji, welcome to the panel. Please have your seat. Joining next, we have Mr. Pravash Das, MD and CEO from Arthan Finance. A big round of applause to Mr. Das. Mr. Das, welcome to the panel. Please have your seat. And joining us is the honorable moderator now. Please help me welcome Mr. Rajeev Varma, MD and Head FIG, Nuvama Investment Banking. A big round of applause to Mr. Varma. Mr. Varma, welcome to the panel, sir. Please have your seat. So, ladies and gentlemen, a fantastic panel with top industry experts here. So, Mr. Varma, all over to you. Looking forward to a great session.
Good afternoon, everyone. Thanks for this invite. And, before I begin, let me just, I think they've already given the introductions to all our panelists. I mean, they're all experts and, people clearly in the field of, on the technology front. They're, I think in each of the organizations, they are the key people who are helping to drive the business. I'm in some ways looking from the outside in, if I might say, because I'm an investment banker. But we do obviously interact with most of the NBFCs and also with a lot of the investors. So maybe while I think we will go through the broad thing, but maybe I will start with giving a perspective of, I think, what a lot of the investors talk about. See, I think today AI, ML is a given that, it is required. Technology is a key enabler. I think there is no debate about that. I think the questions that increasingly we are entangled with or investors tend to ask us, and I'm going to use that as one perspective, is actually going to be around, one is, I think obviously something which the previous fireside chat talked about, right? Whether one size fits all. And I think that's something, if you ask me, most investors grapple with because every company today has a very strong platform, has very strong stacks, tech stacks, very strong algos. And I think it's always difficult for them to figure out, how do I distinguish one from the other, which is better? So again, I mean, that's a very, open-ended question. But maybe I'll just start by asking that. I mean, itself, we all know how important of AIML. But ma'am, maybe I'll start with you. I mean, how do you see, this as being a big, when you're doing that, I mean, is there anything in particular that you see that as a differentiator between one organization and the other? I mean, when you people are trying to build those platforms, I mean.
So good afternoon all. I am Jyothirlatha. I am CTO of Godrej Capital. I just wanted to take this question in a little bit different way. Actually, according to me, one size doesn't fit all, and it all depends upon your business perspective and the kind of customer you are going to target. So, your A and ML algorithms are going to be enablers in your organization. The way you underwrite the customer, and whether the customer is tech savvy and whether he is having the digital data available for us to automatically fetch and do the underwriting and build the algorithms and all. So it all depends upon your business focus. So in Godrej Capital, we are into a segment where we do have the digital data for the customers, and we have written a lot of both traditional and ML algorithms to come up with the insights. Actually, these things are kind of enablers. They are actually coexisting with the credit underwriters, but before and after AI algorithm, the difference that what we are seeing is kind of biased decisions are getting eliminated. So upfront, you are getting the insights about the customer, and it is very easy for the credit manager. He does not have to be a very highly qualified person for us, and quickly he can take the decisions based on these insights. So these are actually helping us in, I don't know, doing more digitization during our digital journeys.
Thank you so much. Actually, moving on to, I think on the housing side, we've classically always seen how, HFCs have been historically been seen obviously having to have a very strong feet on street and a model which people have to, because at the end of the day, I'm buying a house and I have to evaluate that. Obviously, AIML is helping, I'm sure, the processing, but maybe if you could show Sharad more light on how AML could actually be potentially, if it could be even a game changer for HFCs going forward in that space, right?
Hello, myself Sharad Jambukar. I am representing Aadhar Housing Finance as Head IT. And coming to your question, Rajat, housing finance is a very, one of the important pillars in the economy where we are giving house to individuals and building the aspirations and the whole nation. Now, in this context, the NBFC, the course, that remains same. So there is no much change as far as credit underwriting or credibility of customer is concerned. So there, as Jyoti already explained, the AIML has ubiquitous use cases and applications in the whole credit underwriting, and that is must for each and every HFC as well. Now, the additional point what we are looking forward to in property or the housing sector is typically how do we assess the property, the underlying, the secured loan, the underlying property, how do I assess whether it is on the 6th floor or whether it is on the ground floor or whether it is a bungalow, where it is located and what kind of property it is. So basically photos, your geo coordinates and the location. So these are the critical pointers because marketability of that property is very important. So I think the critical use cases in housing are coming up are identifying the marketability of property and valuation of that property, which is very crux in our housing. So I think that is major use case people are working, which I know my colleagues in the housing sector, they are working on this.
That's interesting. Hopefully that also means that it allows increasingly people to have a much better valuation of properties even in some very remote areas, right? Where traditionally there's been a challenge, right?
See, in the whole housing finance sector, the important and critical factor is valuation of your property.
Yes.
You may undervalue or you may overvalue and give extra loans beyond the credit capacity. So this is very important from the control perspective for the housing finance, and that is where regulatory is also looking very cautiously. LTV is very important parameters in housing. So I think this is, AIML has a very big role to play in this particular segment or use case. Thank you.
Absolutely. In fact, I think another sector which is, and I think it directly lends itself to, Vikas, is MSME, right? I mean, we have, and I guess NeoGrowth obviously is a key player in that space, but especially when you're looking at merchants, right? I mean, whether you're working with the merchants. I mean, classically, it's again been a segment where when we speak to a lot of the NBFCs, they've always told us how you can't build an MSME model or lending model without having the physical touch. And so again, I think my question here is, while we have seen AIML play a very big role in the personal loan space, MSMEs have been more challenging. But what's your take on that? How do we, can we make AIML like become a major, what are the challenges using AIML?
Hi, good afternoon all. Now, the point that you have made, right, that physical presence in MSME segment, it's very relevant. And there are two important aspects to it. One is from the organization perspective, that how do you manage your risk if you go completely digital, right? So there is always an apprehension that if you miss that physical link with your end customer, right, there might be more risk than your appetite itself. The second part is from the customer side. So in the MSME segment, not every customer is very tech savvy, right? And they draw the comfort by submitting the physical application. However, as the technology adoption is increasing in common people's life, as well as with introduction of these technologies, AI, ML, then we have sentiment analysis from AI. So this can eventually move on to the tech platform completely, but it will take some time, and it has to be between the organization risk appetite that has to be increased slightly and trust more on technology. Similarly, from the customer side, that they get incentivized and can submit or get their loans processed much faster.
Sure. Also, I guess you deal with a lot of the potentially what I would say even the unsecured piece, right? The unsecured lending, right? I mean, does this also in some ways help, and again, this is probably an open question, to actually allow lenders to become a lot more comfortable with the unsecured space? Because that's been a segment which has been more challenging as a space, right? And we've historically, lending has been obviously the secured spaces where comfort levels are very high, but the unsecured spaces where you've always seen a lot more challenges, right? But AIML is supposed to help be the harbinger of providing that last mile access. So again, maybe, happy to have, others' thoughts also on this, because I think that's the one segment which it's like bridging the last gap, as they call it.
So unsecured definitely is a risky space, right? Especially with respect to your risk management itself. And the way technology is helping, specifically AI and ML, right? It helps you build those strong risk models and help in assessing the right customer, identifying the right customer and extending that loan to that specific customer only. And that gap is bridged by this technology itself, right? Imagine where you have to perform all that risk assessment going through those manual physical documents, right? That's very cumbersome, and there is a lot of op risk also involved. So tech is there, that's where exactly helping. And at NeoGrowth, we have been using machine learning models for many years, right from your customer selection, your recovery, as well as in collections.
Are we seeing the same thing at Ambit?
Yeah. Hi, my name is Smitesh. I represent Ambit Finvest. We are a MSME focused company. I'll give one use case. Before that, I'll give one data point. AI investment in 2026 is going to rise to $26 billion with a CAGR of 13.17%. So that's a given that financial industry is bound for a change with AI/ML. We'll give one use case where we have put this into place to the last mile. We have just launched an app almost 6 months back, which is for our proprietor loan. So as rightly mentioned, how much risk appetite to have for risk-based pricing, that is where unsecured sector comes in. So the way we have done is we have gone for a small ticket slice, completely digital. If customer is tax savvy, he can apply for a loan. We give him eligibility. He selects what he wants. Even on the last mile on KYC, we have done a complete KYC triangulation. So what we have done at the back end is we are capturing his home address through bureau. We are taking his GST address. Basis the two, when he is applying for the loan, we have written AIML rules in such a way that if he meets a particular criteria with his CIBIL score, we are giving him complete straight-through processing with KYC. So we have taken to a level where we have started modeling and experimenting, and this data is going back into our collection system. So what I really see is where AIML is going to help the NBFC sector is one, standardize the way you do underwriting. Risk-based pricing, which is going to be very critical, because today you put everybody in the same bucket. But if you know a customer who is better in giving loan, servicing the loan and is not defaulting, then you basically give him a better risk rate. The way we are also doing is plowing back and giving him top-up loans. So with this 2-3 things, with giving him a personalized service, pre-approved loan, because I think MSME is the backbone of the country, and as we are growing, I think we are the only country we are growing in a positive thing. So I think with AI/ML and a mix of MSME with risk-based underwriting and categorization of customers, this will really help.
Thanks. So maybe I'll just extend that point, and again, Pravash, I'll start to address with that. So what if we have a scenario where obviously, as we look to expand the last one, and I totally agree with your point. Obviously, if India's credit has to, GDP has to go to 100%, like you're seeing in global markets, the last mile becomes important. But again, when you talk to a lot of the players, let's say in the MFI space, or even many of the SFBs, right? What we find is the data accessibility itself, or the quality of the data that you get from that customer segment is, in some way you could say, not really there. I mean, a lot of them don't have even CIBIL scores at all, right? Because they're at a segment which is much lower. But I'm just wondering, I mean, how do you extract value for those customers, and can AI/ML help you get to that level also? Again, maybe you could address that, and I'm happy to get other panelists to also add their views on this, because it's clearly a huge growth area, but it's also the segment which we have consistency, a lot of cyclicality.
Sure. So, hi, thank you. And let me give you a little background of what we do. So, I am Pravash and I am from Arthan Finance. So, Arthan Finance is a digital NBFC which primarily give loans to the small businesses. When I say small businesses, it's like Kirana stores, small pharmacy, and all those are in tier 2, tier 3 type of cities. Like you said, the microfinance customers or this type of customers, you will not find lot of data points. And then how can you leverage AI? So, AI is primarily built on the large set of data. So if you do not have these data which is available for the business and all, you have to go and create it. That is exactly what we do at Arthan Finance. When we have designed the entire questionnaire in such a way that you will capture their income, their expenses, the seasonality of the business, and we also take photographs where you can estimate the stock levels by reading through those computer visions and all. We integrated, so today you will find even a small store also, you will find that in the Google Map and all. How can you integrate those feedback or those ratings from the Google Maps and all? India Mart is also a site where you can get a lot of information about the small business and all. So how can you integrate all those data to create a multimodal AI architecture where you get those informations, put it in a plate, and then your model looks into it from different angle and gives you the interpretations of that. So through that, we are able to achieve nearly 20% automated underwriting without any manual interventions, right? And that too specifically for the MSMEs, which you do not find today, because most of these personal loans or the consumer loans are underwritten, or even credit card also underwritten through AI. But when it looks at the MSMEs, it's a very difficult segment to be in. There are more than 3,000 types of businesses, and you will not find those income and expenses for these businesses at all. Most of the businesses are either cash and carry, or wherever you see some transactions happening in their bank accounts and all, that is not reflective of their business at all. So yeah, so it's not a very straight-through journey, but you have to put a lot of things together to take advantage of AI and ML.
Maybe I think, maybe I'll ask the same question to you. I mean, as in your views on that, because that's clearly been an area where we have seen a lot of debate on how do we go about lending to a segment where, as the professors explained, how they're managing data. But I'd love to get your experience also on that.
So as I said earlier, it is very important to see the segment that you are targeting as a business. If the customer itself if it is new to credit, you don't have even bureau. So you can't really know how he is and all.
Exactly.
Yeah, so especially in that segment, the underwriting comes into place, where actually you are getting into alternate data sources and how he is behaving. Maybe sometimes we have seen the Amazon bills also, so like how he is doing the shopping to just understand the, the behavioral patterns and all. So that segment is really difficult. But overall digital journey, if you see, it is always possible to do a kind of give the touch-free experience to the customers. In Godrej Capital, we have come up with touch-free loans. But if you ask me which segment is mostly adopting that, definitely not the new to credit segment. It is always a different segment which is actually a salaried segment which is adopting these digital trends and all. So overall, this kind of AI and ML algorithm or insights are actually enhancing our physical touch points with more intelligence. So that is what is happening in Godrej Capital. So I feel the more and more digitization and alternate data sources is what we are relying upon for these kind of customers. So connecting to these kind of data sources is also a kind of a challenge. So there are some APIs available for some sources and some APIs are not available. So yes, it is a kind of overall put together AI is giving and is actually enhancing the intelligence.
True. And I guess the other thing it must be helping in some ways is clearly allowing, and I guess as you said that, is it already becoming visible and, in let's say when you're looking at from a credit perspective, and maybe in terms of the asset quality itself, I mean, whether it is, if you were to go back 3 years ago or 5 years ago and look at it today, it'll be great to understand if using AI/ML, have we actually seen those credit metrics is really improving significantly? Clearly productivity I can understand, and that is I think more easier to understand. But it'll be interesting to understand if the credit underwriting has already seen those results coming through with AI. Yeah, go ahead, please.
What you are asking is credit quality effectiveness and the impact onto the book, how it is coming. So typically, I will go back a little, and whether AI is adding value, yes, definitely. Because as a professional or technology professional specifically, the AI is like a salt to the whole recipe. We need not gung-ho much about that, because earlier, few years ago, for financial services CTO, CIO, 3 rules were important. The tools were important, 2 data streams to connect and reconcile. That was one important capability. Second capability was to have a workflow, to put everything into a particular workflow. And third would be business rule engine. Now, business rule engine has played a very critical role over many years in building your credit rules and the credit effectiveness. So it is very difficult now to see that incremental benefit of credit quality with the help of AI. Yes, AI is helping us to do or get something unknown into known charter. And with that, the business ability has improved, the business growth has improved, the quality of the portfolio based on previous business rule engines has been continuing, and AI is adding effective plus to that. And also, the businesses are crying that the cases they would be doing earlier, last year, with this particular new credit score, they may not be able to do. So that is another concern. But yes, credit quality will certainly improve, and it has seen the improvement in the portfolio.
Sure. So, I mean, again, I just want to understand, is that an experience that is being shared by most of us on the panel across the organizations? Are we seeing that?
I can take that. So, yes, we have seen that, and the way we do at NeoGrowth, right, it's all the machine learning models which are there to assess the risk of the customer, right? And so there are 3 things that comes into play. A, the speed. B, the accuracy, right? So with these large volumes, with the speed and accuracy, you can arrive at a good decision, and when you augment that decision with a credit underwriter, right, who will quickly review it and can process this lot faster. So it has improved significantly for us.
Yeah, so, I just wanted to add a point here. If you look at this small value underwriting, for an example, we give loans up to, starting from 2,000 rupees. So, right, underwriting 2,000 rupees for a 15 days, it's impossible to do without having AI in place. If you do manually, it will never be a, profit-making propositions for anybody. And second thing, if you look at the evolution of credit, earlier it was like, all the manual methods, people used to, analyze the entire proposal and all, they used to give a rating. Then comes the scoring, where you have some cutoff score, let's say 500, 600 and all. But you will have most of the cases either selected or rejected basis those borderlines. You'll find many cases which are, actually cases which can be underwritten basis merit, but it doesn't fit into your scores, which primarily was being done till today. That has been replaced by AI. So even if it is 590 out of 600, where your 600 is cut off, you will get a better, customer who is getting underwritten than having somebody at a 600 who have, other different parameters where he was lacking. So definitely it has improved a lot, and through real-time feedback mechanism going into your AI model, that makes your underwriting model more robust, and it definitely helps you to increase the credit quality.
Let me just add one point. At the end of the day, when you are lending, you need to collect. So I think in any model where you are going to do, you need to plow back how is the collection efficiency coming in. If you add that and run your backtesting model, as you disburse more loans, you get a lot of set data, which is alternate data and new data. And also there are a lot of startups like third-party APIs which have come, account aggregator. I think it's a given. It just started with bank accounts, now it has integrated GST. So it's become easy to plow back a lot of data rather than building your own APIs. There are a lot of third-party models which are available. When you put all this together and bring a custom and you backtest your scoring model, I think you will come to know a case which was badly underwritten or borderline underwritten. I think unbank the bank, which is what is coming, and I think NBFCs are thriving because banks are not able to cater to that segment. So with that, and I will touch upon a little bit more with co-lending also coming in. So there are a lot of NBFCs which do co-lending, because the problem is the bigger books, they don't have the appetite to source. But there are scenarios where you have good leads, but you don't want to put in your books. That's where co-lending is thriving. So I think with a mix of all of this coming in, naturally AI is the way to go forward. And if you don't adopt all these models, you will not be in the game.
No, so it's interesting, it's actually the next point I was going to touch upon, how we have seen AI and, becoming creating other NBFCs and the players creating a dislocation in the system, especially in the banking system. What is interesting, and I think touching on the point that you talked about on the co-lending and maybe to the broader panelists also with, I guess, more clarity on the FLDG rules. I guess the broader question is, obviously, we are all, I think on the panel today are all NBFCs who have our own balance sheets. But having said that, there is a very large world out there of fintechs, right, which is a combination of fintechs with NBFCs, which is what, I think most of us are, or, and fintechs are who playing in the ecosystem who are not necessarily NBFC, who are either having to use FLDG or providing that. I think the point that you're touching upon. The question I have is, and maybe I'm going along, is, do you see these models sustaining on a more, let's say, 3-year or 5-year view? Because what we have seen from the outside in is a lot of these, many of the smaller fintechs have found it very, very challenging in the last few years, to sustain and continue to grow. I'm not talking about the larger NBFCs, but especially fintechs or players who are just providing the services without necessarily having balance sheets. A lot of them have had to repivot or redefine the strategy. So I'm just kind of wanted to get your thoughts on how do you see this? How do you see this space evolving? Let's say next 3 to 5 years.
Let me just take this question. I think 3 years back, fintech had a lot of money coming in. Now it has come to a realistic view. So that's a fact of life. Funding has, as you see, an investment banker, funding has really crippled down. So who are the real players will really sustain. And if you have a long-term sustaining model of growth, looking at profitability, not valuation, that's the way the game will move. And second point is, with fintech coming in, the regulators are also coming very savvy with what is the risk appetite, because fintechs are not the guy who are going to take the risk appetite. Their aim is to do sourcing. And that's why if you see the new rules which are coming in with the models, transparency is what is coming in. RBI is also coming in that customers should know what is really happening rather than what it is. And with the way the charges were happening by fintechs and all. So I think real fintechs will sustain. It's a way of collaboration, again bringing to the way of co-lending, or you will say with the regulators also coming there, there is a need, there is a sustenance, unbanked bank is there, and there is a lot of appetite where every player can stay, but with regulators coming in, I think a mix of both with the valuation and profit sustainability is there where the real fintechs will stay.
Also just wanted to add one more point here. You know, if you look at the entire landscape, so what fintechs were doing, two things. One, they were sourcing. Two, they were giving guarantee for the credit loss. If you look at banking and NBFC segments, the sourcing cost is around 1%. The credit loss is around 2.5%. So overall cost which bank and NBFC wants to sell out is around 3.5%. But the way fintechs were looking at it was way more, you know, demanding, or you can say, you know, it is not the cost which is helping them to thrive. And that's the reason you see a lot of fintechs which came up early in, in the last 2.5 years, now has been either shut down the shop, or they are, primarily into co-lending or FLDG based models.
Any other views? Sharad, ma'am, on this specific topic?
So fintechs, by the definition or by DNA, they are supposed to be more tech savvy, and they are supposed to source very quickly as compared to the traditional organizations. But with all the new tech and new tech companies coming in the NBFC space, and also there are a lot of restrictions like FLDG and all this, there are a lot of restrictions that RBI has come up with. And with all those things, I think kind of consolidation is what is happening, is what I feel. So that is what.
Sure.
Yeah. Sorry. So the only point I wanted to add is.
Please go ahead.
Yeah. So on the similar lines, right? So what is important for fintechs and who would be lasting for a longer time is that what exact problem you are solving? Are you addressing the technical problem, or there is an customer use case that you are addressing, right? Because technology over a period of time will be easily accessible to everyone, right? So that's what is an important point from my side.
No, I kind of echo the sentiment of this panel also. I think we have a similar view. I think there's shifting gears, and I know we have more or less time. But, I think there's been also this whole debate about when you talk about the human collaboration with the chat, with the bots, and that's obviously going forward, at least in the AIML journey, everyone using bots and all, and there is this bit of a debate happening, at least, that it's coming at the cost of jobs. But again, to the extent that I guess as you move forward, I mean, do you see any conflict at all in that space? I mean, obviously, it's I think a given that it's going to happen. But do you guys see a conflict at all as the sector really adopts technology to the, let's say, the next level?
So I think let's put the perspective of where is the other part of AIML coming. One, we are talking of credit underwriting. Second, we are talking of collection, propensity to default. The third very important factor is servicing. And I don't know how many people would have visited a bank in near future. Everybody does at his own pace. With coming the Gen Z, nobody likes to go to the bank. So what are we trying to automate the process, which are mundane process? So the answer to your question is both are going to coexist. What will really happen is today when a sales team increases their capacity, you don't want to linearly increase the credit team, the enabling team, or the support function, or even the IT function. So what the technology is really bringing in is bringing that sustainability of profits to the organization. So chatbots, or if you say predictive analysis of what is the issue which is going to come. I know that this customer really needs the SOA every quarter. That's his pattern. If I'm able to read that pattern and proactively send him an SOA, do I need to really have a query from him?
So just taking that example into being, chatbots are really there. Now, in a lending industry, like a typical saving or current industry, what is a customer really wanting? He may ask for his interest certificate if it is a secured loan. He may ask for the statement of account. When is my EMI? If I have not been able to pay EMI, I am going out of station. Can I pay in advance? If I am able to bring all that services on an automated mode, that really helps in a better servicing, better customer service and retention of customers. So I think it is complementing the two rather than having that part in the servicing industry.
Sure. So maybe a very different question, Vikas, to you. I'll start with you. Do you see any major regulatory change? There has obviously been enough, and there are changes happening on a weekly basis in terms of the regulations around fintechs. But over the next 12 months or 18 months, do you see any material regulatory changes happening, or do you expect some or want some? I'll let you take that question the way you want to discuss this.
Sure. I think that the latest one or the recent one is the Customer Data Protection Bill itself,
yes.
Right? Though it's not exactly around governing the AI or MLs, but the intent is very clear that you want to protect your customers, right? So there's a lot of misuse of customer data is happening, right? So the focus on customer privacy has increased. And this is where it is very important for NBFCs also, who has the direct customer information, to ensure that the data governance and management, there is a strong data governance and management in place. This will not only make sure that you are adherent to the regulation, but also help you leverage that data for the business competitiveness. Then on AI, ML, I don't think we have any regulation as of now, but what I have read is that Government of India is definitely working towards it, and I won't be surprised if in another 6 months or 1 year down the line, we will have some regulations around AI, ML itself.
No, I know. I think there is a lot of talk of that, right? Especially, and it's a talk not even in India, it's at a global level, we have these conversations today, right? Because as AI becomes a part of everyone's life, the question really becomes how do you regulate it, and how do you, to link to your point on privacy, right? Because AI will eventually reach a stage where you can actually do everything with it potentially.
Just I want to add to this, the restrictions or the controls on AI for the data privacy. Today's news itself is that Anil Kapoor got the relief from the Supreme Court that any deepfake or any usage of his image or in GIF or any matters in a visual representation is banned by the Supreme Court without his personal consent. Because it is very important for him to earn his livelihood based on his image. So this is a landmark decision itself in the country, that it is restricting AI and for that matter any other digital means to represent the celebrity. So I think that is where it has already started. The worldwide, the very movement of data privacy is already in place with GDPR in almost 4 years ago. Now in India it is again DPDP will make things very difficult. And again in that context, AI is a double-edged sword. It will help us to reduce cost, get compliance, and do the right things in the context of the data. So I think regulation will be useful, and AI will be also useful to help support the regulation. Thank you.
Well, I think well said. I think you need the AI, but you need it in some ways to ensure that it doesn't go beyond boundaries.
Yeah, actually, everybody wants a very personalized offerings. For personalized offering, you need personal data. Okay, unless and until somebody consumes your personal data, they will not be able to give you personalized offerings. So we have to draw a boundary to what extent we want to share and where you want to use those. And more often, like the regulators, they have already put in a lot of things like consent, erasing your consent, periodically reviewing your consent. All those things will be in place, and hopefully all the NBFCs, banks, and all the tech companies will have to adhere to this. Adding to one more thing, what the regulators are doing, and regulators have also put AI in place to monitor most of the NBFCs, most of the banks, and the transactions these days. So that has enabled the regulators to look into, how things are working in the ecosystem appropriately.
Any other thoughts, ma'am?
So actually, I think all the other panel members have already covered on the security aspects. Actually, when you are embedding this AI and ML models real time in your the digital journeys or in the your core lending system and all, it is very important to see that who is having the access to this kind of data. So the feeding to these models and all. Otherwise, the entire thing will go for I think everything will be wrong in the credit decisioning. And second thing is like regulators are not putting any restriction right now, but it can come up wherever the human impact is there. Like your customer experience is getting impacted, customer service is getting impacted because of this wrong AI and ML thing. Suppose somebody coming for foreclosure and you are not giving him his property papers after closing, and it becomes a regulatory issue. So in these things they might come up. This thing right now it is restricted to the security, data security level.
Yeah, no, absolutely. I mean, I think if there are any other last thoughts, we have 5 minutes.
Yeah, so I think RBI has always been a customer focus thing. If you see the new regulations which are coming, the latest regulation which has really come in is if customer has repaid everything, you need to give him the property papers within 30 days. So if you see in last 2 years, everything is revolving around the customer's privacy. Because as rightly mentioned, if you need to give personalized service, to what extent you are using the data, until what extent you are going to use that data in a particular way. See, AI/ML has its plus side and its negative side. It has its ethics. So I think at a company level, you really also need to bring what are you going to use, who has access to this data. Because if you look at the data privacy bill, it's more than what a GDPR is doing. So really speaking, I think the regulators are going in the right direction. AI/ML, they may not put restriction, but with the data privacy law, I think it's encircled everything with the customer focus and ensuring that every NBFC or a bank is financially stable to take care of it.
Sure. Any last thoughts, Vikas or Sharad? I mean,
See, at this occasion, I wanted to share about the overall context of the AI/ML, because nowadays it is very prevalent, and every newspaper articles anywhere, this is a flooding topic. But again, it is as per my personal professional observation, the way digital was few years ago, IT was few 20-25 years ago, it is same. AI is also there. But a very important caution everybody as a technology professional has to keep in mind is that AI is nothing but a salt. The more you use, the more it will damage. The lesser you use, it will help you. So accordingly, one has to be judicious and cautious about using this AI, because the efficacy and effectiveness of this technology or models is only time will tell. It is not possible in the first place itself that whatever I have deployed is right or wrong. Because when we say AI is fine, but ML is the double-edged sword, because it may do right things wrong as well. So I will, at this juncture, I will suggest the judicious use of AI/ML is very important. And for that context, our example, like the corporate context, where we can do lot of productivity by reducing your monotonous tasks and automating them into the AI/ML based automations, is the first step every organization can take. And slowly they can build it into very critical areas, including customer facing areas. That is how it will help the adoption and also make organization learn the journey of adopting AI. Thank you.
well, I think it's been very enlightening, and I think hopefully, provided a good perspective on how AI/ML is, I think, clearly a big enabler, I think, which we have all agreed and, needed, but also where hopefully you will have to have some boundaries. And I guess, anyway, I think the regulator is probably very cognizant of the same. So, I don't know, are there any questions from the audience? Oh, any queries?
can we have questions from the audience, please? You can raise your hand and please introduce yourself and your organization and question to which specific panel member. If it is a generic question, I think Mr. Varma is the right person to decide which panel member to allocate. So please raise your hand and we will provide the mic to you. Yeah, can we have the mic there? Sir, I request you to kindly keep the hand raised.
Good afternoon. First of all, thanks to the panelists for very really insightful discussion on the futuristic technological implementation into the domain. My question is actually open to the panel who want to take the lead. More from the Gen AI aspect, which is being, since the starting of the year, everyone is talking about Chat GPT, Bard and all those things coming in, and people now within the organizations, corporate talking about data democratization and all. So, and more moving from, moving toward the natural language. So how you guys are within your organizations are seeing that discussions or the demand coming from the business or the other functional people, and what are your thoughts in terms of developing those capabilities or moving, leveraging those technologies in future?
Very interesting chat GPT question it is. So this open AI is still evolving, right? So in Godrej Capital, I will share what kind of use cases, and also there are a lot of complicated document we do have. So basically it is being used for content generation and all. So how do you change? It has tables, it has images, it has a lot of things. So we have done a kind of solutioning which will help our, as a kind of productivity booster to our sales and credit and all these teams. And as you know, this OpenAI is already a kind of only the content generation and all. What we are feeling as when you are giving some kind of insights to the credit managers, if you are just showing the end result, so those people are not satisfied because they would like to know why, what and how you have come up with this scheme. So this explainable AI is what is actually picking up, and it is giving a lot of comfort for these guys to just move ahead with this kind of scores or the insights that AI is giving. And yes, that is what is happening. And another one is, if suppose you want to know about any kind of your customer, like SMEs and some companies and all are there. OpenAI is being used in that one, the Google search, like it's a kind of elegant search to understand what is happening in the directors and what kind of POS, what is happening and any cases, any legal issues, and it is helping us to get the content at one place.
Thank you. We can take one more question. Yeah, I think we have a question. So I request you to please keep the hand raised. Can we have the mic?
Hello. Hi. This is Sanjay Panda. It's the data privacy. I'm a legal person. Is the data privacy bill has come. Now, what is the delta plus extra effort has been taken on the technology side to protect the data? Panel, everybody, the question is everybody. So I'm on the security side also, now into also a legal person, that the data privacy bill has come. To protection is now, extra protection is required because there is penalty attached to that. So,
Yep. So this is very good question, very relevant and very emergent situation for everybody. In specifically financial services will be the most impacted with the DPDP compared to other sectors in the economy. Now coming to DPDP implications, as far as financial services concerned, very important tool or the intervention that would be required to handle the compliances of DPDC would be consent management. This is the biggest and very important tool that every CTO, CIO will have to be building or they have to be borrowing. So very important is right of customer to know for what purpose his data is taken and is it used for the same purpose. So you have to record the consent You have to give the purpose, you have to mention, record the audit logs for the same purpose it was used and present when demanded. So to this particular DPDP requirements, it is very important to build consent. And consent has to be built in each and every point of your customer journey as well as transactions wherever you give services to the customer. I hope I have addressed this very important point.
Yeah, that's true. That's
Also,
the journey, end-to-end journey. Thank you.
Also, just to add, he's talked about more from compliance point of view, but when you look at from the business angle, today you run your algorithm where you approve thousands of loans in a day, right? And some malicious software or something like that which corrupts your AI model, right? You will start disbursing loans which are not supposed to be approved. And it creates huge impact as an organization, right? So to protect all those things, it definitely you need to create 2 layers of extra protections on the data what you are capturing and how you are using those data.
Thank you so much. And ladies and gentlemen, a big round of applause to this wonderful panel which spoke on artificial intelligence and the use of robotic process automation in the field of NBFCs. Now I would quickly like to call on stage Mr. Prakash Sumaya, Director and Business Head from Finate by Central. Prakash ji, if you could kindly do the honors. We'll start with Ms. Jyothirlatha B, CTO from Godrej Capital. A big round of applause to Ms. Jyothirlatha for her wonderful contribution in the panel session. Moving next to Mr. SHARAD JAMBUKAR from Aadhar Housing Finance. A big round of applause to Mr. SHARAD JAMBUKAR for his wonderful contribution in the panel session. Moving next to Mr. Vikas Dhankhar from NeoGrowth Credit. A big round of applause to Mr. Vikas Dhankhar for his wonderful contribution in the panel session. Moving next to Mr. Smitesh Shah from Ambit Finvest. A big round of applause to Mr. Smitesh Shah for his wonderful contribution in the panel session. Moving next to Mr. Pravash Das from Arthan Finance. A big round of applause to Mr. Das for his wonderful contribution in the panel. And our honorable moderator, Mr. Rajeev Varma from Nuvama Investment Banking. A big round of applause to Mr. Varma for wonderfully moderating the panel session. Would request the honorable panel members to kindly step forward for a group photo, and Prakash ji, if you could also join them. A big round of applause again, ladies and gentlemen, for this wonderful panel of experts who spoke on artificial intelligence and RPA and NBFC. Let's change the game of finance.